Hello Wolfpack, we have avoided this recent price action quite well. Now, a lot of people, were telling me on my comment section that I should have just bought in on this daily candle close above the yellow line. Obviously, that yellow line is the one downtrending from November. But I said, hey guys, wait a second. This isn't a confirmed breakout yet. We're not really seeing much here that is confirming the breakout at all. And I think we should wait a bit more. And my general consensus was this. I'd said, we should wait until we actually break this downtrending dotted yellow line, right? Or at least until we get a 3-day candle close above this line. But I changed that and I said mainly from yesterday, hey, we should actually wait until we break this downtrending dotted yellow line, because this is not enough, right? This break above that yellow line is not enough, especially considering the fact we haven't seen a follow through. I said that, and guess what? It's played out quite well. We haven't actually seen a follow through because, as I said, this is not a confirmed breakout in my opinion. We need to break that dotted yellow line, that dotted downtrending yellow line. That would be what we need to break, at least from a daily candle close, to get a confirmed breakout here. Now, how did I identify the fact that this wasn't a confirmed breakout? And how do I identify the fact now, currently, that this probably isn't a strong move and we might actually just fall back down? Well, I'm saying it because of this reason, right? There's actually a few reasons, but the main reasons are this. When you break out, right? When you break out of a major structure, when you break out of a 11-month long resistance line, you don't just see one daily candle and then go straight into red. That's not a breakout, right? On top of that, we saw, as you can see, descending volume in this uptrending move since the 27th of November. So over a week, right? Almost 2 weeks, we've seen descending volume in an uptrend, which is not good. It doesn't represent momentum. And when you see a breakout, you're meant to see an upscale in momentum. Instead, we've seen a downshift in momentum, which is not good at all, right? On top of all of this, we also saw in the hourly chart, this is the same chart, just flipped over to the hourly, we went straight into a new structure. We didn't break out and then break upwards and go parabolic like what you're meant to do when you break out. We broke upwards and we went straight into a descending triangle structure. Yes, an ascending triangle structure is bullish. However, this was more like a double top formation rather than an ascending triangle, right? If we remove all of these lines here, it looked like an ascending triangle, but in reality, that's an M formation, right? That's a double top formation. And the resistance there was stemming from around 20,400. So that's not good, right? And we saw that. And that's what I saw yesterday as well. I looked at that chart yesterday. I said, hey, look, double top formation, bearish divergence, doesn't look good. Descending volume on the daily. This isn't a breakout, right? And a lot of people kind of said, hey, look, you're flip-flopping. But at the end of the day, as analysts, we have to look at the charts as they happen. And this was clearly not a breakout. And we've actually, shown pretty clearly here a lot of weakness on Bitcoin. I would not be surprised in the slightest if Bitcoin drops back below this major downtrending yellow line. It wouldn't surprise me at all, right? I think, that's probably what's honestly more likely at this point. Now, look, there's obviously a chance we just break upwards, but the point is we avoided a lot of stress by not buying at this point. And that dotted yellow line is where I'm going to be buying. If we do break that dotted yellow line, that's where I'd be buying. Now, my buying plan, right, I'll just outline it for you quickly. If we don't go down to the lows again, now, as you guys know, I'm a believer in the 4-year cycle theory. I do think we will go down to the lows again. However, if we don't, if we invalidate everything, we just break upwards here, I'd buy 50% at the breakout of a dollar yellow line, and then I'd buy 50% at the breakout of the 200-week SMA, which is this green line here. Which actually won't come up in this chart because it's the Binance chart. I'll bring it up on the Bitstamp chart. It's this green line that I'm going to bring up here. And it should be loading in any second. It's up here at around 23.5k. And you might think, well, that's pretty high, right? That's a pretty high number. And yeah, look, maybe it is, right? Maybe it is high. And if we see strength on that move after we buy 50% at the yellow, we see strength and we see considerable strength and enough to change my mind, maybe I'll lower that price. But right now, I'm just going to stick with that because, look, there's no point being overly optimistic. You need to be conservative in this market, right? This is a very volatile market. Being overly aggressive in a volatile market is an easy way to lose money. So we have to be conservative. And look, there's nothing saying, I'm not like swearing by blood and giving a blood sample to an obligation, legal obligation that I'm going to have to buy at 200-week SMA. I could very well lower that price if I see the significant strength. But as of right now, my current buying plan, if we do go up from here for Bitcoin, which I don't think we're going to do, would be, as per my prediction, would be a breakout of this yellow downtrending line, this dotted one, 50% buy, and then 50% buy at the 200-week SMA. And that will give us an average price of Bitcoin around 21 to 22,000, which is pretty good regardless. Now, obviously, I have alternative buying plans. And they are as follows here. So if we go down, for example, to 11k bottom, which I don't really think that's going to happen. I think it's a little bit unlikely to go that low, to be honest with you. But if we do, it's 33% 11 to 13, 33% at the breakout of a yellow downtrending line, which of course we need to change now because that's already broken and it could be a fake out, but we'll get to that in a later video. And then 33% at 17.5 to 18. And then obviously if we don't go down to 11 to 13, it's going to be 33% at 17.5 to 18, and then 67% at the breakout of the yellow line. So yeah, I will change those buying plans up, seeing as this yellow line might become semi-invalid, right? Obviously, if we drop back down below this yellow line, this would be a fake out, and that would kind of, hinder the validity of the downtrending line. So we'd have to change up the buying plan a little bit at that point. But we're going to wait for it to break down first, because as of right now, yes, the breakout hasn't led to bullish price action, but it is technically still a breakout. And how do I know that? Well, we haven't seen a fake out. Okay, we haven't seen a confirmed fake out, so it is a breakout at this point. I know this is a bit confusing. We're throwing around breakout, fake out, but the point is, yeah, we've seen a breakout. The line is technically broken. We just haven't seen the follow through yet. But I'm not going to delete the line because it's still valid, okay? And that's evident in the fact that we actually broke out. We came down, we retested that line. We technically seen a resistance support flip. We just haven't seen the confidence to follow through yet. So another thing I want to look at as well is the fact, and this is supporting further downside, okay? Because let me just get into this quickly. 4-year cycle theory, I'm a big believer in it. My prediction for the November top was based on the 4-year cycle theory, partially based on it at least. And we were able to get out of the market at 66k. Okay, we were able to sell our altcoins to 66k, and at 60k we were able to label this a bear market. Okay, so we got out very early. In fact, we got out less than 5% away from the top. So, that was extremely accurate there, and that was based on 4-year cycle theory, at least partially. So I'm using that same theory that predicted the top to predict the bottom. And as per the date range trend, now I have lots of samples of different data ranges, different data points that kind of, extrapolated across, all kind of point simultaneously towards a Q4 bottom in 2022 on Bitcoin, which means anytime between October, November, and December. Now, I've narrowed this prediction down a lot based on alternative factors that I'm not going to get into, but to kind of narrow it down to October or November. So between this month and next month, so basically within the next month and a half, I think we'll be bottoming out on Bitcoin. And I think that will be happening in Q4. So where do I think that will happen? I think, honestly, at this point, the most likely bottom on Bitcoin will be a retest of the 17.6k low and possibly a small drop below it. I don't see it as majorly likely at this point that we go down lower than that. Now, if we were to go down lower, the possible bottoms would be 13.8k and 11.5k. Those are the possible bottoms if we were to go down lower. But at this point, I'm relatively confident that we would bottom out at 17.6k or around it, at least in a double bottom formation. That's what I'd probably guess would happen. If I was to actually take a guess right now and just randomly just take a guess at gunpoint where I think Bitcoin will bottom out, I would say, sometime between now and the end of November, and probably around 17.6k, maybe a small wick below to 17k or something like that. That's where I think the bottom would be. So yeah, 4-year cycle theory has kind of, and it's a 10-year long trend based on the halving on Bitcoin. It does predict a Q4 bottom, so I'm obligated to stick to that. In my opinion, I am, and that's my prediction. So, with that said, well, we need some more bearishness, don't we? Because we're up here at 20k. What's going to bring us down that low? Well, for example, S&P 500. Yes, the S&P 500 has bounced off of a 200-week SMA. Yes, it's done that. That's a strong bounce. But we have also come up here to resistance, and we formed an evening star formation, or something resembling an evening star formation, which is a bearish candlestick formation where you see a strong green candle, then like a bearish doji, and then a strong red candle. That's a bearish candlestick formation from resistance at 3,800. And we can hence expect the S&P 500 to go down a little bit from there. Also, the total cryptocurrency market cap has had this pink triangular formation. We broke it to the downside. We went straight into a descending wedge. But we've actually come up now between the descending wedge and the triangle and rejected off of the triangle formation for like weeks long now. So we can expect at some point to shift downwards here and go down to a low, possibly a low in at a price level we saw in June, which would line up with a double bottom on Bitcoin. So the way I see the charts right now, and this is one more thing I'll look at in a second, but the way I see the charts right now is this. I think that, yes, we saw a breakout on Bitcoin, but ultimately it was premature. We don't have the strength to follow through. That's represented in the volume. That's represented in the fact we saw a double bottom straight into that. And I think we will be going down for a Q4 bottom. Now, my prediction just hasn't changed at all. It's just as simple as that. I haven't flip-flopped once. I've kept this prediction. For those of you who've stuck around on the channel for almost a full year, this has been my prediction since late November last year. It really hasn't changed. In fact, I've been saying basically the same thing for a long period of time. And you might ask, well, why hasn't it changed? And it's because it doesn't need to. What needs to change? Look at where we came from November last year when this prediction was active. We're down, you know, even if this is an incorrect prediction, even if we do go up, we've still saved ourselves a 75% drop on Bitcoin. To some extent, it was correct. And I just haven't seen the invalidation for it yet, and so I'm going to stick by it. What I want to look at as well is the fact that typically during bull markets, you do see a horizontal consolidation line. Now, if you'll ignore these MAs, in fact, I'll remove them for a second. These pink lines are horizontal consolidation lines that we've seen in every single bull market. Okay, in 2014, we saw a horizontal consolidation line at around 300 USD before dropping down in one final capitulation. We then saw a rounding bottom and we went upwards. Same thing in 2018, horizontal support line at 5,800, one capitulation, rounding bottom and went upwards. And we're seeing the same thing right now, and this kind of supports a Q4 bottom at 17.6K. Okay, we've seen a horizontal consolidation line at 28.6K, sorry, it just says 28.8K on this chart, but it's actually 28.6K. And when we drop down one capitulation and we see a rounding bottom and we come back up, that's what I would expect on Bitcoin. And you might think, well, Wolf, you know, why would you expect a typical bear market bottom if it hasn't been a typical bear market? And the fact of the matter is, it has been a typical bear market. And this is something that people don't understand. This has been a conventional bear market. There has been nothing about this bear market in the slightest in terms of the price action, right? The macro, yeah, but the price action, that has been indicative of anything other than a traditional bear market. This is completely normal price action. I said it before in a video recently, I'll say it again. If I was to go back in time 12 months from now and I had to look at what this chart looked like right now, and I had no knowledge of recession, no knowledge of any of the macro, I would just think this is a regular bear market. There's nothing that's happened here in the price action at all, even in the midst of recession, that has done anything to disprove the fact that this has been nothing but a conventional bear market. And hence, we can expect, seeing as the price action has been exactly the same, that we will see a conventional bear market bottom. Right? I challenge people to debate me on that. I really do challenge people to debate me on that. What about this bear market in the price action has been so different than other bear markets? Nothing, okay? Nothing. And this is why the whole idea that the macro is going to drag us down to 10K is ridiculous to me, because we have no evidence that this is an unconventional bear market. Okay, yeah, look, if we had dramatic evidence of this bear market being so different to other bear markets, maybe I would agree. But at this point, we've seen horizontal consolidation breakdown. We saw that in all the other bear markets. We saw a cross, let me bring it up. We saw a def cross on the 3-day chart between the 50 and the 200 SMAs, and that def cross led to the final breakdown of a horizontal consolidation. That's exactly what happened in previous bear markets. You know, everything that's happened here has happened in previous bear markets. You might say, okay, well, we lost the 200-week SMA. It's like, okay, yeah, we have. But at the end of the day, with diminishing returns, that was destined to happen eventually. So it's not like that one factor there just kind of, you know, tears down the whole structure of the bear market. It really doesn't. That was going to happen eventually. That's what happens to moving averages, especially with diminishing returns. So that was destined. So there's, you know, that doesn't make it an unconventional bear market. So I think at this point, and this is genuinely what I believe here, I think that we'll see a double bottom formation in Q4. And look, if we do break upwards here, if we don't retest the Q4 low, at the end of the day, this kind of was a double bottom formation, right? It really was. I mean, look at this chart. That's a double bottom. You know, that is a double bottom. So regardless of whether we actually test the price point, you know, it's a double bottom, and that would be a conventional bear market bottom. Now, the reason why we want to actually go down literally and retest the price literally at 17.6K is so that there's no confusion about the validity of the 4-year cycle theory. Because, of course, the 4-year cycle theory wants the low in the price action to be in Q4. So hopefully that happens. You know, and if it does, that would be great. But if it doesn't, technically this is just a conventional bear market bottom, and it should be expected for it to bottom out like that. So, you know, I think we'll go down in Q4 because I have to, due to the 4-year cycle theory. I really hope we do for the predictability of Bitcoin in the future. Let's see what happens. That's kind of just where we're at right now. We just have to wait and see. Our buying plan is very clear, right? I've got a very clear buying plan. You can go back to that part of the video before. In fact, I'll zoom out right now so you can see it again. This is the buying plan, right? That's a very clear buying plan, and it puts us in a great position regardless of what happens in Bitcoin. For example, if the first scenario here triggers, we've got an average price of Bitcoin at like 16K, all right, or 15K, maybe even lower. If this scenario here triggers, we've got an average price of Bitcoin around 19K, and if this scenario here triggers, we've got an average price of Bitcoin around 21 to 22K. So we've put ourselves in a great position, guys. Regardless of what happens, we're getting great average prices on long-term Bitcoin bags, and I think that's all that matters, really. You know, at the end of the day, you can go on and on about predictions and all this, but at the end of the day, what makes you money is your average price. And every single scenario here gives us a great average price. So let's see what happens, and let's hope for the best. Let's hope that we do come down and test it in Q4 as we would expect. Anyway, thanks for watching, guys. I'm going to get into the macro situation a lot tomorrow, get into interest rates, get into inflation numbers. That's a lot to discuss there tomorrow in regards to that. I'm also going to get into the S&P a bit deeper in the S&P and how the S&P bottoms in relation to inflation and interest rates. But more on that tomorrow, guys. Thanks for watching, and I'll catch you in the next one. Cheers. Thanks for watching the video, guys. I want to take a brief look into the BitGet Exchange. Now, this is my favorite exchange. I use this exchange for trading personally. I think everyone in Wolves Crypto should do so. Why is that? Well, the reasons are very clear in my opinion. First and foremost, it's 5 times cheaper than Binance, and Binance is known to be the cheapest exchange. It's also non-KYC on your personal end if you don't want it to be, and that obviously stands true to the values of cryptocurrency being decentralized. You can also KYC if you want to make it easier for tax reasons, but if you don't want to, you don't have to. That means that it is available globally, so everyone in the world can access this exchange due to the fact that it's non-KYC, which is great. It also has a protection fund, which is a very important thing, right? Because you know, exchanges get hacked all the time, and people get hacked all the time by people in their personal lives. If you do get hacked and something happens, you can make a claim to that protection fund. They've got over like $200 million in reserve, so that if you make a claim and your claim is accepted, you can get that refunded into your account. That adds extra security to the exchange as well. And then on top of that, it's got a reward center that's available with my referral link, and you can gain access to over 4,000 USD in rewards. And I think just a temporary time frame, there is an extra little bonus thing going on. If you sign up to the exchange, use my referral link, and you do one trade, you'll get $10 deposited into your account, regardless of whether that was a profitable or negative trade. So go ahead and sign up to the BitGet Exchange, use my referral link. It really helps out the channel, and it definitely helps out yourself. This is by no doubt, by no stretch of the imagination, the best exchange I have found in the cryptocurrency market. It's so good that I actually reached out to these guys for a partnership. They didn't reach out to me, so check it out. And then we've also got the Crypto Academy, and if you're interested in becoming a trader, if you're interested to learn how to trade, to learn how to do TA, to learn how to identify market patterns, etc., and navigate an exchange correctly, you can sign up to this course, Become a Trader, a 10-unit course. This course is, of course, developed by myself and Megawell Crypto, who's a fellow analyst in the space that a lot of you already know. We work very closely, and we work closely using our 2 separate perspectives on the market to create one very consolidated, very concise course that is no doubt extremely useful for anyone wanting to become a trader or anyone wanting to improve their trading capabilities. We've got 10 units. All of these units have been critically analyzed by ourselves and also people we know in our personal lives, and we found them to be completely coherent and completely effective in teaching people how to trade. We use different learning strategies, for example, visual learning, verbal learning, practical learning. We've incorporated all of that in, and this is by no stretch of the imagination the best course you're going to find on the internet for cryptocurrency education. So go ahead and email us here at Crypto Academy Courses to find out more information. Without further ado, I'll end the video there. Thanks for watching, guys. Hope you enjoyed, and I'll catch you in the next one. Cheers.